Dear students, welcome back to Educator Guru YouTube channel. Today we will try to learn about royalty accounts which is there in all the three universities, that is Bangalore City University, Bangalore North University and Bangalore University, probably for second semester. So try to understand the royalty accounts. Before that, I request all of you, those who have not still subscribed to our Educator Group channel, please subscribe and encourage. Now, royalty accounts is very important. Without royalty, nothing happens in this world, because that is the right where we have to get it, right? In that, let us see what is royalty accounts meaning. The owner of an asset, example mines, quarries, patent, copyright, etc., as a business arrangement may allow another party, lessee, license, publisher, etc., the right to use that asset against some consideration. Such a consideration is calculated with reference to the quantity produced or sold. This payment to the owner by the user to the asset is termed as royalty. Don't think that it is so what you call elaborative. It is very simple. When we are using somebody's property, for that usage we have to pay in turn some amount. That some amount is called as what actually royalty. Example, I will use some mining, what you call, of which belongs to some other person, where I will extract ore, right? How much extract that I ore, for that in turn I will pay the amount to the owner of the land. Then that amount in consideration what I pay is called as what actually royalty. Or if I write a book, I cannot sell, then what I will do? I will ask the publisher to publish it. He is going to publish and he is going to sell. For each book that what he is going to sell, for that he get me some amount in turn for my effort, then that is called as what you mean by royalty. So royalty is nothing but the owner is different and user is different. Users, what actually uses the asset, and in turn he pays the amount to the owner, that is called as what actually royalty. A royalty is generally paid to the owner of the right under the following cases. I am going to get you different cases. Where the owner of a mine allows another the right to extract minerals from land. Where the right such as patents or copyrights are licensed in favor of another. Where an author, artist or designer gives a exclusive rights to another to copy the work. So there are three different what do you call issues. That means we are using somebody's property, in turn we are going to pay what actually royalty. This is in what actually general. I said the landlord. Landlord is also called as lessor, authors, patent owners. Lessee, it is called as tenant, the person one who is using it, publishers, licensees, etc. So there are two parties, that is landlord and lessee, right? Important terms in royalty: minimum rent or dead rent, short workings, recoupment of short workings. So this is very important before we work out problems on royalty. Minimum rent or dead rent. So it is very simple. You take the example, I have written one book, right? I cannot sell, so I will ask some publisher to publish. He will publish, but as soon as he publish, nobody will buy it, because the students must know my name. Then only it is possible. Assuming that I am very new to for this book, that what I have written, then it takes some time. It may take 1 year, it may take 2 years. Then till that time I cannot wait. Then I will say that if it sells only 10 books, then for per book he is going to get me 10 rupees, means 10 into 10 it becomes only 100. So what I will say that for the amount you fix some minimum rent for the few years, that is called as you pay 5,000 rupees per year or 6,000 rupees per year. Whether he is going to sell it or not, but he has to pay some amount, that is minimum amount, which is called as what do you mean by dead rent or what I call a minimum rent. it may become loss, or it may in future it may become what I call profit, but there in agreement there must be the terms, that is minimum rent or what actually dead rent. Then short working. What is that short working? Assuming that minimum rent has been fixed for 5,000. Minimum rent has been fixed for 5,000. Whereas actual royalty earned, assuming it is 3,000. Assuming it is 3,000. But he has to pay me how much actually? 5,000. But royalty it is only 3,000. Then he has to pay from his pocket rupees 2,000, which is called as, what do you mean by short working, which is called as what actually short working. So when you fix that minimum rent, dead rent, then we will start what actually calculating royalty. When you calculate royalty, if royalty is more than minimum rent, no problem. If royalty is less than minimum rent, then the question arises that what actually short working. Assuming that royalty is 6,000 rupees you have earned, then there is no question of what actually minimum rent, no question of what actually short working, because here there is no short working, because it is very simple, because your royalty is more than what actually minimum rent. So short working is nothing but which is the dead rent is what actually more, actually your royalty is what actually less. Then what is recruitment of short working? The owner what actually, the tenant cannot keep himself what you call silent, because he says that when I am paying 2,000 rupees extra from my account, then how to recover it? How to recover it? Then he said that short working can be recovered. That means he will specify, or there will be an agreement between the two parties, it can be recovered in some period. So when you say that some period, that is called as recoupment of what actually short working. The recoupment of short working can be of two methods. Two methods of recovering what actually short working. One is fixed recoupment, the other one is floating recoupment. What is fixed recoupment? It is first 3 years. First 3 years of the lease, or first 2 years of the lease, or first 4 years of the lease. That means within this period, if you have any short working, that you have to recover. If it happens even after that, then it is not what you call it, I am not going to allow you to recover. Assuming that even in the 5th year that you are going to get short working, means that I am not going to allow you to recover it. That is called as what you mean by fixed period, which is called as what actually fixed recoupment. What is floating? The name itself will give definition. It is called as floating. That means say that it is called as next year, next 2 years, next 2 years, next 3 years. If we say that next 2 years, next year, that means whenever it start copying happens, then it can be recouped in the next year. That means you have 1 year time. If in that period if doesn't, then it will go to automatically profit and loss account. Then or he may say that next to 2 years. Yes, it is very simple. That means if happens in the first year, he can take second year and third year. It happens in the third year, it comes to 4th year and 5th year, which is also called as what do you mean by, either they may use next or they may use what actually following year, or they may call it as subsequent year. All these means it is one and the same, whether it is next, following or subsequent, which is called as what actually floating, You will understand when I work out the problems separately on floating recoupment. So try to understand. I will recap the thing. Fixed means first 2 years only, or first 3 years only, or first 4 years only. Whereas floating means I will say that whenever short working happens, that means it can be recovered in the next 1 year, or in the next 2 years, or in the next 3 years. That means or they may use next, or what you call following, or subsequent. It is one and the same. All these means one and the same. So this is what do you mean by floating. Then most important is types of royalties. So just to know, because you must be knowing what is royalty. A Performance royalty. Music or song is played by a radio station. I hope you know that whenever they use a particular song, then they have to pay what actually royalty to the concerned person who has sung the song. Book royalty. Publisher to what actually? Authors. Because the author has written the book, then publisher has to pay what actually? Royalty. That is called as what actually? Book royalty. Next one is patent royalty. Creator or innovator, which is called as intellectual royalty. That is most important. It is called as altogether intellectual property. We said intellectual property rights. Patent royalty. Because you have invented this, that means that cannot be used by anybody. If anybody uses, then they have to pay what actually? Royalty. That is intellectual royalty. Nowadays, it is going what actually in almost all what you call R&D, which is called research and development. It has become what actually popular. That is patent royalty. Franchise royalty. Say that you have opened one beautiful shop or one hotel, right? Your brand is going like anything. Then what you will do? Say you will give one person to open one more branch by using your name. Then that is called as what actually franchise royalty. You will see in so many products what actually franchise royalty to open a branch. Mining royalty. I did not tell, it is called as what actually mines. That means you will take the mine and then you will extract ore and then give it, then that is called as what actually mining royalty. These are the different types of what actually royalties what we usually see. Then we should try to understand what is the accounting procedure. What is the accounting procedure? Say number one, preparation of analysis table, most important. If you do not prepare analysis table, then you cannot find out what you call short working recovered and how it has been done and what is the amount payable to the landlord every year. For that we have to prepare analysis table. Then next one, preparing ledger accounts in both the books, that is lessor and lessee, that is landlord as well as what actually tenant, we have to write. Then C, preparation of journal entries in both the books. That means either they may ask ledger accounts or they may ask journal entries, right? In that we have given with minimum rent or without minimum rent, where we can do both the ways, that is minimum rent and without minimum rent. So I will show you how to prepare a format of analysis table. You see, analysis table format: year, output, royalty, minimum rent, short working recouped, short working not recouped, then amount paid to landlord. Say SW, I have given you short workings. SWR, short working recouped or recovered. I have used one word, recovered. Recovered is easy for the students, that's why I have said recovered instead of recouped. SWNR, short working not recouped or what you call recovered. APLL, it is called as amount paid to landlord. So in this format, first you have to prepare what actually the table. So unless you prepare this table, neither you can pass journal entry, nor you can prepare what actually ledger accounts, right? Just I will show you one. Assuming first year, your output is how much actually? 200. Your output is 200. Whereas per output you have to pay royalty of rupees what actually 5. So 200 into 5, it comes to how much actually? 1000. That means royalty comes to rupees how much actually? 1000. Royalty comes to rupees 1000. Assuming that your minimum rent is 3000 rupees. Your minimum rent is how much actually? 3000 rupees. Then your royalty is only 1000, whereas the person has to pay how much actually? 3000. That means he has to pay from his pocket how much actually? 2000. That is called as what actually? Short working, which is called as short working. Whereas no short working recouped in that year, no short working not what actually recouped in that year. So amount payable to the landlord is how much actually? 3000. Is called as how much actually? 3000. Unless you prepare like this, then you cannot pass any journal entry. Then it is very simple that assuming it is fixed first 3 years, then what you do? First year, second year, third year. If you can able to recover this 2000 in the first 3 years, then automatically it is recouped. If it is not recouped, then it will be transferred to that is called as short working not recouped, which is called as what we transfer to profit and loss account. So try to understand this table. If you become master in this table, it is nothing but you have mastered with royalty accounts, right? So we will work out separate problems on fixed recoupment as well as what actually floating recoupment. Yes, students, we will work out the problems on short working by preparing table of analysis. So I have selected 5 problems, 3 problems on fixed and 2 problems on floating, right? All question paper problems only. I have not taken any problem. I have taken all previous year question papers of different what do you call universities. So problem number 1, prepare an analysis table from the following details. Royalty payable 50 paise per ton of output. If you take out the output, you have to pay what actually per ton 50 paise. Minimum rent, which is called as dead rent, 7,500 per annum. 7,000 per annum. Recoupment of short working up to 3 years. 3 years. Up to 3 years. That means only the first 3 years. Output during the first 3 years were 10,000, 14,000 and 18,010 respectively. Now we have to find out whether how he is going to collect that amount or not. It is very simple. They have asked for 4 marks. Here written 4 marks question. That is, you have to prepare what actually table of analysis. You have to prepare what actually analysis table. So let us say that how the table it is there. So table of analysis. Problem number 1, I have written fixed so that you will understand. So what are the columns are there? Year, output, royalty, minimum rent, or you can write dead rent, short working recovered, short working not recovered, amount paid to landlord. This is a standard table. Some persons they write recouped, not recouped. I have written recovered, easy word for you to remember, right? You may commit mistake by writing recoupment spelling. For that sake, I have written recovered. So, how many years? First year, second year, third year. What is the output? 10,000, 14,000, 18,000, right? 10,000, 14,000, 18,000 means per ton how much is the amount royalty? 50 paise. 50 paise. 10,000 into 50 paise is how much actually? 5,000. I have written how much actually here? 5,000. Next second year, 14,000 into 50 paise is how much actually? 7,000. You have written how much actually? 7,000. Then third year, 18,000 into 50 paise is how much actually? 9,000. Here I have written 9,000. But minimum rent, you have to pay how much every year as per the problem? 7,500. 7,500, 7,500. Minimum you have to pay 7,500. Now we say that royalty earned is only 5,000, but minimum rent is how much? 7,500. That means you have to pay from your pocket how much? Actually 2,500, which is called as what? Short working. Then no question of recover because short working is there. No question of short working not recovered. So amount payable is minimum rent is how much? Actually 7,500. Paid how much? Actually 7,500 to whom? To the landlord. Second year, 14,000 is there. Royalty earned is only 7,000. Again minimum rent is 7,500. That means your minimum rent is more than what actually royalty. Again you have a short working how much actually? 500. So nothing what you call short working recovered or short working not recovered. Again you have to pay from your pocket how much actually? 7,500. Then let us go to third year. 18,000. Royalty is how much actually? 9,000. Now royalty is more than minimum rent. Royalty is more than minimum rent. That means short working recovered is how much now? 1,500. There is no short working. Now we have short working recovered how much actually? 1,500. So let us come back to the problem again. They have given short working can be recouped up to 3 years. That means only for the 3 years. We are in the which year? We are in the third year, right? So this third year it will be closed. So let us take 2,500 plus 500. 2500 plus 500. This is first year, this is second year. Total is how much actually? 3000. But we were able to recoup how much in the third year? Only 1500. How much you could not recover is 1500. So this loss has to be borne by that person only. So 1500. So again he has to pay the amount, how much actually? 7500. Right. So in this way, when you work out the problem, that is called as, what do you mean by fixed? It is called as what? Fixed. We will work out two more problems on fixed. Again it is question paper problems. Second problem. The Anish Minerals Limited acquired a lease from a landlord for the purpose of extracting ore. It was agreed that the company should pay rupees 12 per ton of ore raised subject to a minimum rent of rupees 36,000 a year, and the short working could be recouped in the first 3 years. Again you see that first 3 years, that is fixed. Prepare table of analysis. The output raised for the first 4 years, first 3 years, but output is given for how many years? 4 years. 2019-20, 1750 tons, 2020-21, 2750 tons, 2021-22, 3750 tons, 2022-23, 4750 tons, which has been given. So let us write the table of analysis. As usual, problem number 2, fixed. This is in the question paper not for 4 marks, it has been given for 5 marks in that year. 2019-20, 1750, 2020-21, 2750, 21-22, 3750, 22-23, 4750. Then amount is, royalty amount is per ton is how much? 12. 1750 into 12 is 21,000 I have written. 2750 to 12 is 33,000 I have written. 3,750 to 12 is 45,000 I have written. 4,750 to 12, 57,000 I have written. Now what is minimum rent? Minimum rent is in all the years is how much? 36, 36, 36, 36. Now in the first year, royalty is only 21,000, whereas minimum rent is 36,000. That means he has to, let's say he has to pay from his pocket how much actually? 15,000, which is called as short working. No question of short working recovered, not recovered. It is total amount payable is minimum rent is how much actually? 36,000. Then second year, 33,000 royalty, again minimum rent is more, 36,000. Again he has to pay from his pocket, which is called short working, 3,000. Total is comes how much actually? 36,000 again he has to pay. Then the third year, you have only 3 years now. Now we are the third year. Your royalty is 45,000, whereas minimum rent is 36,000. That means now you have crossed the minimum rent. You have a excess of what actually more than the short working. It is how much actually? 9,000. That is 45,000, 36 means it is 9,000 is excess. So 9,000 is recovered, but you have a time of only 3 years. Now we are in the third year. 15 plus 3, 15,000 plus 3, it comes to how much actually? 18,000. Whereas in the third year we have recouped how much? Only 9,000. How much we could not recoup? We could not recoup how much actually? Another 9,000. So that 9,000 what we could not recoup, which has been transferred to what actually? Short working, not recovered. So amount paid to landlord is once again how much actually? 36,000. Even though he has earned 45, but he has given a what you call limit that you can recover your short working within first 3 years. So he has recovered that 9,000, but he has incurred a loss of 9,000. The amount payable to the landlord is 36,000. Whereas fourth year, it is 57,000 is royalty. You need not worry about now what actually minimum rent. Royalty is how much? 57,000. You just put nil in all these 3 columns. You have to pay to the landlord how much actually? 57,000. Once again, this problem is under which method? Fixed, because it is first 3 years. I told you we will work out 3 problems in this particular video on fixed but actually short recoupment recouped, right? Now problem number 3, prepare an royalty analysis table from the following: royalty payable rupees 3 per ton of iron, minimum rent 40,000 per annum, short working are recovered during the first 3 years, again first 3 years of lease only. Output during the first 3 years is 10,000, 12,000, 15,000 tons respectively. So now we have to prepare table. So how to prepare table? Very simple, as usual. Problem number 3, it is fixed. Year, output, royalty, minimum rent, short working recovered, short working not recovered, amount paid to landlord. 1, 2, 3, 10,000, 12,000, 15,000. Here I have written 10,000 into 3 is 30,000, 12,000 into 3 is 36,000, 15,000 3 is 45,000. So 30,000, 36,000, 45,000. Minimum rent 40,000, 40,000, 40,000. Whereas first year 30,000, whereas minimum rent is 40,000, that means we are incurring a loss of how much actually? 10,000, right? 10,000 as short working. Then nothing is there in the next 2 columns. You have to pay to the landlord how much actually? 40,000. Next 36,000, once again it is less than the minimum rent. 40,000 is minimum rent. Royalty earned is only 36. Again you have a loss of how much actually? 4,000. Dash. Again you have to pay from your pocket how much actually? 40,000. Now the period is only 3 years, first 3 years, 15,000. You have royalties 45,000, that means you have a excess of how much actually? 5,000. That means 40,000 is minimum rent, but royalty earned is 45,000. Short working is nothing, but short working recouped is how much? First year is 10,000 loss, plus second year loss is 4,000. Total loss is how much actually now? 2 years, 14,000. Whereas you have recouped in the third year how much actually? 5,000. That means how much is still it is there? 9,000, but you cannot recover this 9,000 any of the next year, because as per the agreement you have to recover only in the first 3 years. So take out that 9,000, that is it will be transferred to short working not recouped. That means ultimately goes to profit and loss account, and the amount payable to landlord is how much actually? 40,000. I hope students you have understood the short working recouped in the fixed period. All these 3 problems relating to question papers only. Students, now we will work out problems on floating recoupment. We have worked out 3 problems on fixed recoupment. Now we will work out 2 problems on floating recoupment. Prepare royalty analysis table from the following details: minimum rent rupees 75,000 per annum, royalty payable rupees 5 ton per ton output, short working of the year can be recouped on the next 2 years. This is very important. Next 2 years or subsequent 2 years, following 2 years, all are one and the same. I told you how to find out floating means you should be careful with this sentence: following, subsequent or next 2 years out of excess royalty. Output for the first 5 years were here 1, 2, 3, 4, 5. Output in tons 10,000, 12,200, 20,800, 25,500, 35,500. Now we will prepare analysis table. Table of analysis. Here output, royalty, minimum rent, short working recovered, short working not recovered, amount paid to landlord. So here 1, 2, 3, 4, 5. Output 10,000, 12,200, 20,800, 25,500, 35,500. Per ton it is 5 rupees. 10,000 into 5 is 50,000. 12,200 into 5 is 61,000. 20,800 into 5 is 1,04,000. 25,500 into 5 is 1,27,500. 35,500 into 5 is 1,77,500. So this is royalty amount. This is royalty, actual royalty earned. Now I have written that 50,000, 61,000, 1,04,000, 1,27,500, 1,77,500. Minimum rent or dead rent. All the years you have to write how much actually? 75,000 as per the problem and agreement. Short working. Here you see royalty is 50,000 whereas minimum rent is 75,000. So difference is 25,000 is short working. That means that has to be paid by the lessee to the lessor from his pocket. These two columns are what actually nil. So amount payable to lessor is 75,000. Next year 61,000 whereas 75,000. Again royalty is less. How much is less? 14,000 dash 75,000. As per the problem, it can be recouped in the next 2 years. Very simple, next 2 years. That means for the first year you have 25,000 short working, that can be recouped in the second year and what actually third year. If you don't recoup this 25,000 within the third year, then that will go to what actually short working not recovered. Then the other one is 14,000 is there, that will take another 2 years, that is third year and what actually fourth year. Let us see the third year output. The third year is 1,04,000. How much is actually? 75,000. How much is excess? You just see here the excess amount is very simple. 1,04,000 minus 75,000. 75,000. How much is excess? 29,000 is excess. 29,000 is excess. This 29,000, out of this 25,000 belongs to the first year and 4,000 belongs to the second year. So total recouped, it is how much actually? 29,000. So payable amount, even though he has earned 1,04,000, you have to recover 29,000 and you pay only to the landlord how much actually? 75,000. Next 25,500 whereas 1,27,500, 75,000 is minimum rent. Once again you have excess. How much excess? 1,27,500 minus 75,000. 1,27,500 minus 75,000 means you have excess of how much actually? 52,500. You need not worry that. Say how much you have to pay? 25 plus 14, that is 39. You have recovered how much actually? 29. You have to recover another 10,000. So out of 39,000, 29,000 recovered, the remaining is 10,000. So 10,000 is recovered, short working not recovered is nothing. Out of 1,27,500, 10,000 is recovered, amount payable is how much actually? 1,17,500. That means 1,27,500 minus 10,000, then you will pay how much actually landlord? 1,17,500. Now the fifth year 35,500, 1,77,500, minimum rent is 75,000. No question of short working recovered anything which has already been recovered. The amount payable to landlord is how much actually? 1,77,500. This is how we have to work out in case of floating recoupment. Now problem number 5. Prepare an royalty analysis table from the following details. Right? Minimum rent 60,000 per annum. Royalty payable 75 paise per ton of output. Short working can be received in the next 2 years. Once again next 2 years. I told you next 2 years, following 2 years, subsequent 2 years. It means one and the same. Out of excess royalty. Output for the first 4 years is 20,000 tons, 24,000 tons, 56,000 tons and 50,000 tons respectively. Now for this problem we will work out analysis table. Now the table of analysis, that is floating I have written year 1, 2, 3, 4, output 20,000, 24,000, 56,000, 50,000. Then royalty calculation, actual royalty I have given you the calculation on the right side. 20,000 into 75 paisa 15,000, 24,000 into 75 paisa 18,000, 56,000 into 75 paisa 42,000, 50,000 into 75 paisa, 37,500. So minimum rent is how, that is 15,000, 18,000, 42,000, 37,500. Minimum rent is 60, 60, 60, 60. You see here, every year you have to pay a minimum rent of 60,000. You see the actual royalty. In actual royalty, all these years, that is less than the minimum rent, right? And has given time for the next 2 years only. So let us say that minimum rent is 60,000, actual royalty is 15,000, short working is how much actually? 45,000. This is first year. It can be recovered in which year? Second year and third year. You just remember, second year and third year. So you will pay how much actually? 60,000. Then second year 24,000, actual royalty is 18,000, again minimum rent is 60,000, again you have short working of 42,000. Now here only you have 87,000 rupees what actually short working from the first 2 years. Now this 42,000 can be recovered in the third year or what actually fourth year. No, nothing can be what you call recovered or transferred. It is how much actually? 60,000. Then again third year 56,000, 42,000, 60,000. Again it is 18,000 is short working. Here you must be very careful. You are in the third year end. The first year short working has got a time limit of only 2 years, following 2 years or next 2 years. Now you did not recover either in the second year or in the third year. Then what you have to do? You have to transfer this 45,000 to short working not recovered. Not recovered is nothing but it goes to profit and loss account. It is a loss. It is gone. Now this year also we have paid how much actually? 60,000. Next fourth year 37,500. Again minimum rent is 60,000. Again you have a loss of 22,500. That means you are in the fourth year. What is the second year loss? Second year loss is 42,000. Now we are in the fourth year. Second year loss means actually third year, fourth year. You could not recoup. Then again you have to transfer that 42,000 to which one? 42,000 transfer to profit and loss account or short working not recovered. Again amount payable is how much actually? 60,000. You may have one question, what happened to this 18,000 of the third year? Then you will have to wait for the fourth year and fifth year. What about the fourth year? We have to wait for fifth and sixth year. So this is how we have to prepare what actually table of analysis, right? So we have worked out 3 problems on fixed and 2 problems on okay, floating, right? In my next video, I am going to get you that is how to write journal and ledger accounts in both the books, so that I'll try my best to get you for the same problems the journal entries and ledger accounts, right? So thank you. If you are not subscribed to the Educator Guru channel, please subscribe and encourage. Thank you.